Hi, friends. So we meet for the next episode of Multibagger Stock Series. This is the fourth episode, and I'll be giving the fourth stock now. And the stock name is Marksans Pharma. So this belongs to the pharmaceutical industry and a very exciting industry with a large business potential and a very large and addressable market, not only in India, not only in Asia, but all over the world. So this is one such sector which can only grow from here. It can never reduce because medical needs and as the world is aging up, as even the Indian population will start aging up later onwards, and how the world population is aging up, this is one sector, one industry which will only grow from here. It cannot reduce from here. So a very exciting uh, industry, and that is why it presents a lot of opportunity for Indian pharmaceutical companies as well. As soon as we gather more and momentum and more market share into the world pharmaceutical industry. So let's move ahead. So what's a multi-bagger stock? I think we have mentioned in the three episodes also. I'll just quickly run it through. So multi-bagger stock is something which gives you more than 100% of its initial investment. We call that at a multi-bagger stock. For example, a stock that quadruples in its value is four bagger, and a stock that increases fivefold is a five bagger. So if it goes 100 times means it's a 100 bagger. And this word actually came from a book from Peter Lynch in 1988. Now, a very useful quote, a very interesting quote. No matter how small you start, dream always big. So it doesn't matter in stock markets on which amount you're starting. It can be 2,000, 5,000, 10,000, whatever is the saving you can do from your overall earnings. Even a small investment can make your dream very big. So we all have heard about a story on Wipro. If somebody has invested 1,000 rupees in 1960s, it is worth around 10 crores. Or if somebody has invested around 10,000 rupees in 1980s, it is more than 10 crores. So even a small amount can become very big. It can lead to a huge potential in terms of your wealth, and that can you can retire early, or it can give you a lot of wealth. So that's the beauty of stock markets. As soon as the business grow, the company grow, you grow automatically. So that's a beautiful quote I thought I'll share with you. So, characteristics of a multi-bagger, again, we have discussed in detail in last three episodes. I'll not take much time on this. I'll be quick on this. Reason being, this is slightly bigger presentation. It has a lot of aspects. Since it was the first stock which I picked from pharmaceutical industry, I thought let me also give a glimpse of what the industry of pharma looks like in India, how exactly it is coming in the world, how exactly are Indian companies getting into the world markets, how's our pie, or let's say the pie of the cake increasing. So I just wanted to touch on these aspects as well, and that's why probably the this series is slightly longer, but I'll try to skip the things which we already know. But before we go on to the statistics, or let's say the characteristics of the multi-bagger stock, again a quote from a very successful person in the stock market, Mr. Warren Buffett. He says, "The stock market is a device where for transfer of money from the impatient to the patient." So all the impatient investors, probably whenever they will see the stock slightly in green, or when they will see the stocks not moving, it is sideways, or if probably they see a small red into the stocks due to any reason, they will try and sell their shares. And who's buying those shares? The investors who will sit long on the story, who believes in the business potential, who believes in the company's fundamentals, who believes in companies uh, leaders, who understands how the business is growing in the company. So the transfer of wealth or the transfer of stocks happens from this kind of impatient people to patient people, and those are the people who makes ultimate money. So it's a quote from Warren Buffett. uh, so in terms of characteristics, the first characteristic, of course, high revenue growth. We always want to get into a company which is, if at all, it can give around 20% growth in terms of revenue for several years. That becomes an ideal characteristic of a multi-bagger stock. Sometimes it does not happen for all the stocks, but still become multi-bagger because you see a higher P expansion, and sometimes you see a higher margins and higher profits as well. So it's not that it's a very essential part, but it's a desirable. Large addressable markets, yes, that is a very important thing. See, even if the business is good, if the company is good, the leaders are good, the owners are good, but if you don't have a large addressable market, if it's a small market, then probably you can only expand up to that particular limit. So, for example, if you take about the paint industry, so Asian Paints is around now has around 65 market share of the entire paint industry. Now, if the paint industry itself is, let's say, $100 billion, so you can only grow up to that potential which the industry is offering you. So if the addressable market is large enough and the company is small, and if you are able to pick the stock which is small, smaller in size as of now, and then you allow the company to expand into the entire cake of the addressable market, then is the stock which becomes you, which gives you multi-fold returns, and it becomes a multi-bagger. So in our case, Marksans Pharma, it has large addressable market. We'll see in the forthcoming slides how exactly the pharma industry is growing from here, and what have been the growth in the past years. Disruptive potential. See, in pharma industry, the disruptive potentials comes into the form of R&D. It comes in the form of patents. Is actually comes in the form of how exactly you are exporting the markets, you're exploiting the markets, and how are you able to increase your market share in terms of your goodwill and your good marketing and your quality of the medicine or the pharma product which you're making. So those are the ingredients which will give you a probably a higher gain into that market share. The disruptive potential is only when you bring more and more R&D facilities into picture, and also when you bring a lot of patents into picture. That gives you additional pie, that gives you additional yardstick to increase your overall footfall in the pharmaceutical market. So if at all you bring in new things, the overall market will also expand. The overall pharma sector will also expand, and along with that you also expand. So that's the way we have to look into disruptive potential in terms of pharma stocks. Strong fundamentals. We always want a multi-bagger stock to have strong financials. It should have a robust revenue growth, increasing profits, healthy cash flow, good management. These are the very important characteristics which we want in the company, where we want to sit on the stock for long time after investing whatever amount we can. This is the parameters we actually want in the stock so that it can give you a multifold returns. Again, touching upon the next characteristics of multi-bagger stock, first I'll give the quote, which is, and this time I just try to include some quote because when you're talking about investing, you also have to, transform your character to allow your stock and investment to become a multi-bagger. See, you can always choose a good company, but you require three very important things when you want to make a wealth of it, out of it. So first thing, of course, you want to choose a good stock. That is first part. You also want a good entry price. That is again a very important part. You want to give it a long time horizon so that the business grows, and along with that, you are able to also grow along with it. And more importantly, you want a characteristic. You want a character in yourself to sit on that wealth. See, it's very difficult to not book your profits when it is showing you 1x, 2x, 3x kind of returns. But we want to book profits at 100x, 500x, 1000x kind of returns. For that, it requires a lot of character, it requires a lot of patience, and you have to continuously train your mind that this is not something which I want to, convert into cash so fast. I don't need money. I don't have any expense. If you don't have expense and if you don't need money, just sit on these stocks. These are beautiful stocks and beautiful stories, which people only talk out of 20 years. That was one multi-bagger. If I could have picked up at that price, probably today I would be sitting somewhere else. So rules of trading in that sense: make peace with your losses, so won't disturb you in future. So loss and profits in financial markets, in stock market, is a part and parcel of game. It may look red for some time, but we all know if your business is growing, it will again turn into green. What other people think of your trading is not none of your business. So that's another part. Don't compare your trades to others. So don't compare your investments. Suppose his investments are growing 1x, 2x very fast, but your investments are growing at a slower speed. It doesn't matter at all. I always say that if you have to catch a train from Delhi to Chennai, probably some trains will run faster, some trains will go slower, but ultimately you'll reach to Chennai from Delhi one day or the other. It will be a difference of some hours. So probably if your friend has making, he's making you 20x of your wealth in 3 years, you can also make 20x. It might take you 3.5 years or 4 years. That's all. So coming to the other characteristics, we want low debt to equity ratio. That is again desirable, but of course there are some businesses which require very high investment. In that, probably this criteria would not fit in. But for our stock, this criteria is fitting in. We have very low debt, and so that's again a very good thing for this company. This company sitting on very high cash. We want the Multibagger stock to give high ROEs. We'll see these figures in the later slides. The ROE has been pretty good. It's more than 20% and over many years. So that is again one good thing for this stock. We want a highly motivated, ambitious, knowledgeable management with high moral values. Yes, of course. This has very knowledgeable persons in the leadership team. They are highly educated and they are very experienced professionals. And one more thing which I saw very good in this company is that the leaders are from different backgrounds. So a group of people with different skill sets, with different knowledge backgrounds, they have come together and they are cultivating the seeds of this great company. P expansion justifies exponential rise in the stock price. So one is your increase in EPS that gives a thrust in the overall stock prices. But we also want a P expansion. If that happens, then probably the stocks grows much multifold, because then the EPS growth and P expansion both are happening at the same time. I assume my viewers understand what is P expansion. I will not touch too much time. I'll not take too much time on this. This stock has already given 540% returns in last 2 to 3 years, which means this stock has undergone a very high P expansion and it also undergone a EPS growth, and probably this will continue. That the kind of fundamental this stock has, the kind of industry this is catering to, I think this has all the ingredients to rise from here multifolds. So we'll give a small overview of the company. So FY24, the revenue was 2177 crores. So it's a very small cap kind of a company. So this time I wanted to, even last time also the company which I shared was into small cap category. This is also in a small cap category. The first two, probably the stocks which I gave, one was from around Nifty 50 stocks. So that was a very high kind of a market cap company. Second was Indigo, which comes into mid cap category, but still the market cap was very high. But if you see this is only 2177 crores of revenue, so it's very small market cap, and that gives a room for expansion. Very high EBITDA margin, 21.1% in FY24. It has a very good cash balance, as we were talking some time ago. It was 657 crores of cash in Q2 FY25. It has 4 manufacturing units and 4 R&D centers. It has around 300 plus products diversified into many portfolios and across the countries. We'll see in the forthcoming slides. And 1500 SKUs. SKUs means very unique number. So every product of pharma, generally a SKU is given to it. A unique number is given. So this has around 1500 SKUs. So each product can have a subset of the products also, and for that we can give SKUs. It is around 2000 plus employees, so it's not very small industry as such. And it is among the top Indian companies in the OTC segment. OTC means over the counter segment, which means when you go to a medical shop and you can take a medicine without prescription, that is called as the OTC segment. It has $100 million of revenue only in US itself. It is amongst top 5 Indian pharma companies in UK. That's another achievement of his. And it has got many unique accreditations. It has accreditations from US FDA, UK MHRA, Australian TGA, EMA, and Health Canada. So, very highly accredited company. As I was talking about, these are the board of directors. These are guided by visionary minds. We have Mark Saldana, which is the founding MD of this company. We have Sandra Saldana, again the promoter, whole-time director. We have Vardhaman Jain, this is again a whole-time director, and Dr. Sunny Sharma, non-executive director. If you see the credentials of these 4 gentlemen and ladies, you'll find that they're all from different backgrounds. So the owner is from the science graduate and has had 30 years of experience in the marketing, production, and financial functions. The second promoter is MA in Arts, Sociology. So she has experience in human resource management, business management, projects and supply chain management. Again, a different kind of a field. We have Vardhaman Jain, who's probably M Pharma and pharmaceuticals, and 27 years of experience in manufacturing, quality R&D, compliance, and regulatory affairs, both for API and FDF. He has successfully handled several regulatory inspections, including US FDA, MHRA, PMDA, Japan, and WHO. We have Dr. Sunny Sharma, who's again MBA and MBBS. So four gentlemen who are into the top leadership team, and they're all from different fields. Uh, so we discussed for some of the leadership personnel. Apart from that, we have Satish Kumar, he's the MD, Marksans UK Limited. We have Anjani Kumar, he's COO, and David Mohammed, again MD Pharmaceuticals Australasia Pty Limited. So again, we have different backgrounds in terms of experience and the portfolios they are all managing, but they're all very learned and highly qualified people. So again, a very important quote. It came from Philip Fisher. The stock market is filled with individuals who know the price of everything but the value of nothing. So most of the people in stock markets are only chasing the price. They don't want to understand the intrinsic value of a stock. They don't want to understand what are the growth potentials in the industry, how exactly the company is panning out, what is the past performance, how the leaders are, how are the R&D facilities, how are they generating new products, how are they able to probably make a edge into their industry and keep on continuing the growth. So this is where we all lack our experience into stock markets. We just want to chase the price, but we don't want to chase the value. So this is again a good quote from Philip Fisher, which I thought probably I'll share. So Marksans Pharma is engaged in the business of formulation pharmaceutical products. The key focus areas lie in the OTC and prescription drugs that have widening applications across fields like oncology, gastroenterology, enterology, anti-diabetic, antibiotics, cardiovascular, pain management, gynecology, among others. So again, a very diversified fields which is catering to the pharma industry. So how the Marxian journey has been, we'll just briefly touch it. In 2001, Marksans was incorporated as a wholly owned subsidiary of Glenmark Pharmaceuticals Limited. In 2003, it spun off into a separate entity, Glenmark Laboratories Limited, changed its name to Marksans Pharma. 2005 acquired Nova Pharmaceuticals Australasia Pty Limited. Then in 2015 acquired Time Cap Laboratories Incorporation USA. So it has been doing organic growth in terms of acquisitions. So it has taken one company in 2015 in USA. In 2005 it has taken from Australasia. Then in 2007 and 2008 acquired Bell's Sons and Company in 2007 and acquired Rilanchem Limited in 2008. 2017, it increased its focus on OTC segment in US market. 2020, it acquired Access Healthcare Dubai. In 2023, it raised around 372 crores in equity via conversion of warrants issued to Orbi Med and promoters, and acquired a manufacturing facility from Tiva Pharma India. In 2024, Markson crossed 2,000 crores of revenue. So that has been the key events which has happened in the history of the company. Growth and achievements. Revenue growth is touching 2177 crores. We just now discussed. Its OTC revenue is now growing at 3.6 times, and it has now reached 1613 crores. So out of 2177, 1613 crores are coming directly from the OTC segment. EBITDA margin has been expanding. We'll see in the forthcoming slides as well. Consistent growth in cash from operators over the years. The reserves are very healthy of this company. It's really sitting on cash, no debt. That's again a very good advantage. It can create. So when you're sitting on the cash, you can probably lead to a larger expansion without taking debt, without taking loans, which give you a higher edge because your cost decreases, margin increases. SKUs growth of around 70% to 1500 products. Manufacturing capacity increased from 4 billion units per annum to 26 billion units per annum by 2017. So that's again, 2024. So that's again a very good growth. It has newly acquired Tiva Pharma facility, and which has a capacity of manufacturing 8 billion units per annum. So that's again a fantastic growth in terms of organic and inorganic. So so as I said, this company has been acquiring a lot. See, when the company sits on cash, if you even see the IT companies of India, they're all sitting on cash. That's why you see a lot of acquisitions happening, or a lot of buyback happening from these company, and in the process they give a lot of wealth, and the investors make a lot of money, because even if you're doing a lot of buyback, then also the stock prices increase. If you're doing acquisitions, then probably your revenue margins and your integrated healthcare system will increase in the pharma industry. So that gives it a unique edge. See, so if you talk about acquisitions, Australia they acquired Nova. The sales growth from that time has been 74x, and this was done to leverage Nova's research capabilities to establish A and Z front end presence. They acquired Belly's Healthcare from UK. This was done in 2007, and they're getting 7x volumes from there. And it has done this to increase its UK market presence and to enter into OTC segment. They have taken Relaunch M. This is again from UK. They have taken Time Cap Labs. Again, this was done in US. This was again to establish US front end presence. They have acquired AHC. This is in UAE to establish front end presence in Middle East and Africa. And they also acquired a unit in Teva Pharma in 2023 to expand manufacturing capacity in India. So they have acquired in UK, they've done in Dubai, they've done in UK, they've done in US, and also in India. So again, a pan-India based they're trying to cover the entire world with this kind of a company. So again, great acquisitions. Capturing OTC opportunity. So if you see globally, the category wise distribution there, so the cough and cold segment, they are giving it $43 billion. Vitamins and tonics are giving them 34. Pain relief 29 US dollars, 29 billion US dollars. Skin treatment 15. Others are giving 35. Expanding their OTC business, so they want to capture multi-billion-dollar OTC opportunity. Marksans competes in large and growing categories, strengthening business in North America, increasing store brand penetration in North America, aim to double US store brand OTC revenue, expanding product pipeline. So they are focusing to expand our product pipeline in OTC segment to sustain growth momentum, and complete coverage in key therapeutic segments. So that's again how they are increasing their OTC business. The continued expansion of our product pipeline. So product pipeline. So plan 34 new filings over the next 3 years, and 16 products are already filed and awaiting approval. This is in UK. In US, there are 32 products are in the pipeline. 20 are oral solids, 12 are ointment and creams within oral solids, and 4 are soft gels. Australia and New Zealand, they have filed, their 10 products are in the pipeline, and rest of the world, I think 120 products are already approved, 120 products are waiting approval, and 108 products are in the pipeline. So if you see, under approval and under pipeline are also huge number of products. Once they get approved, again the expansion of business. In last 2 years, I'm not going to details. It can become boring to a certain extent. So until 23 product launches have been done. Majority of them has been done in UK, US. That's the most prominent market they have been doing in last 2 years. So you can probably read all this thing, but not important. Revenue mix in therapeutic. So most of the revenue which is coming from the pain management kind of pharma products, 44%. Next is cough and cold, around 14%. Then from cardiovascular, followed by CNS, anti-diabetic, gastrointestinal, and others. So that's how the revenue mix has been for the company. For OTC segments, it was in 74% in FY23. Now it has decreased. It has increased from 69% from FY22 to 74% in FY23. And the prescription based, which is RX, that has slightly decreased from 31% to 26%. But they want to really grow the OTC segment. That's how the focus of the company is. Geography flies split. So that's again very interesting part. 45% of the business comes from US and North America, and next 40% comes from Europe and UK. So I think that's again fantastic, because around 85% of the business is coming from UK, Europe, and US. So that is, I think, again a fantastic kind of a market which the company is catering to. Company has 1500 SKUs and 300 products in the form of tablets. That's that again we have already seen the previous slides. So if you see the revenue breakup in FY24, so OTC was giving 74% revenue, and RX, which is a prescription based, around 26%. In terms of geographies, if you see, so US and North America is giving 304 crores. This is up 37% YOY basis. This is, we're talking about Q2 FY25. That is the last quarter which has gone by. UK and Europe again 6% YOY increase to 246.7 crores. Rest of the world is again 1% increase YOY basis and 21% increase Q on Q basis. It has now reached to 27.5 crores. Australia and New Zealand, 31% increase from YOY basis, although there is a small dip on QOQ basis, around 63.6 crores. So that's a geography wise revenue breakup. In the USA, the company is servicing the region through its WS Time Cab Labs Incorporation, which was acquired in June 2015. It manufactures around 50 plus products across private level OTC generic prescription drugs. Its customers include names like Target, Walmart, Walgreens, Kroger, etc. So again, if you see what Trump has been saying, that he wants the companies who is exporting to them to manufacture things in USA. So that's again advantage to this company, and that will, if at all, what Trump is saying, if it does it, that he wants to increase or decrease the corporate tax to 15% for the companies who are manufacturing in USA. So that's again a good news for the company. This can only increase their profits. We already saw that from USA they're getting 45% revenue, and they're all manufacturing it in USA. So that's again a good news. UK and Europe, the company services the region through two subsidiaries, Rollencham and Bell's Healthcare, and that is how they are operating in UK and Europe. Australia and New Zealand, they are operating through Novo Pharmaceuticals. We already discussed. The company has tie-up with topmost retailers and pharmaceuticals in Australia, like Woolworths Limited, Colesmere Limited, Aldis, Metcash, Foldings, and it supplies to the New Zealand pharmaceutical market via alliance of Teva Aero Pharma. Middle East, Southeast Asia, CIS, Russia, and Africa had acquired AHC in UAE that will strengthen its presence in the MENA region. So that's how they have been expanding into the world markets. We already seen. So they have four manufacturing units in Goa, UK, and USA, all combined. USA, they are producing hard gels, tablets, and capsule capacity 6 billion units per annum. In UK and Europe, they are mostly producing non-sterile liquids, ointments, and power sachets. Supplies to UK, West Africa, and Middle East. Capacity 2 billion bottles per annum, 1 million tubes per annum, and 1 billion sachets per annum. In Goa, they are producing capsules and tablets, one of the biggest manufacturing facilities in Asia. They have recently acquired Teva manufacturing facility Goa. We already discussed. So, but it has a capacity of 8 billion units per annum. So total capacity of this company now stands at 26 billion units per annum. And this is a breakup we already discussed in the previous slide, so I'll not uh, take too much time on this particular slide. We'll go to the next slide. So new products. So in USA they have introduced 32 products in the pipeline. 20 are oral solids, 12 are ointments and creams, 4 are soft gels. In UK and Europe, planned 34 new filings in next 3 years. 16 products awaiting approval. In Australia and New Zealand, 10 products are in the pipeline and expected to launch around over the next 2 years. 124 products in the rest of the world, 120 awaiting approval, and 108 in the pipeline. I just give a very good quote on stock market from Jeff Bezos. Given a 10% chance of 100 times payoff, you should take that bet every time. So even if you think that your stock can become a multi-bagger stock with only 10% chance, go for it, because if you have in your portfolio 10 stocks, each having 10, even if 10% chance, probably you can make your wealth 100x, 1000x. So 1 lakh can become 100 crores. That's the kind of potential these companies have, because they are small markets, small market cap companies can grow multiple times from here. Again, a very good quote from Mr. Warren Buffett: if you don't have a way to make money while you sleep, you will work you will work until you die. So we all say, no, the money should work for itself. That's how Mr. Warren Buffett also used to think. So just buy a stock, sleep over it. There are people in the company, there are great leaders who know their business, and they will grow the company and money for you. Acquisitions we already discussed. I'll not take much time. Accreditations also we discussed, so I'll skip this slide. The intelligent investor is a realist who sells to optimists and buys for pessimists. Again, a very good quote from Benjamin Graham. R&D centers. So the company has 4 R&D centers in Goa, Navi Mumbai, UK, and USA. The company's R&D expenditure was 1.8% of its revenue and 9 million FY24. So we'll see these breakups also in next slides. The company has 50 plus scientists working under its R&D department, 70 plus products in pipeline, 350 plus dossier filed, and 300 approved ANDAs, MAs, and 25 plus filed ANDAs, MAs. So that's again a good thing. The amendment in AOS in July 21, company raised funds through OrbiMed Asia for Mauritius FYCI Limited. The company signed warrant subscription agreement with issued around 4.9 crores convertible warrants. So that's how they've acquired this company. So not very important for us. R&D capability. So they have R&D capabilities in UK, US, Goa, and Navi Mumbai. That's how the 4 countries the R&D centers have been divided. We have 4 R&D centers, 50 plus scientists, 70 plus products in pipeline, 300 plus ANDAs, MAs approved, and 25 ANDAs, MAs under approval. So we discussed this part. And So if you see this graph, probably on the left side, you will see that they were probably spending only 5 crores into R&D in FY17, which has crossed and reached to 35 crores by FY24. So they have a total revenue of only 2177 crores in FY24. Out of that, they're spending around 35 crores on R&D centers. So that's again a good thing. And the percentage, if you see, is around 1.6 to 1.8% into the R&D spending. So I think it's a healthy uh, division of their revenue and profits into R&D, which can only give you better products, new products, and can increase a business multifold. Subsidiaries we already discussed. So we have Marksans Pharma. This is limited UKWS. Marksans Pharma US. Nova Pharmaceuticals. Access Healthcare Medical Products. New approvals required. Company received US FDA approvals for esomeprazole magnesium delayed release capsules USP 20 mg OTC. This product is bioequivalent of Nexium 24 HR delayed release capsules of AstraZeneca Pharmaceuticals LP. The new drug will be manufactured in Goa. Marksans Pharma is focusing and planning to strengthen its OT segment even more in organic growth in growing markets and EU through acquiring front-end marketing and distribution companies. The company's focus is to get into the liquid creams and ointment OTC category. Now, we'll just touch upon how exactly the pharma industry of the world looks like, India looks like, and how our biotechnology and pharma industry are developing in India and how the world is growing. So, these next 5 10 slides will give you the glimpse of the overall industry of pharma in India, in outside, how it has been growing, what have been the CAGRs of growth, and what do we look ahead till 2047. So that's a very important slides. It is giving you that we talk about now addressable markets. It is giving you a glimpse of that. So from July 23 to July 24, sorry, there has been an increase of 8.36% in the India's drug and pharmaceutical export on the rise. Now, Mr. Prem, our beloved Prime Minister, Mr. Narendra Modi, what he has told is it is because of the efforts of the pharma industry that today India is identified as pharma of the world, pharmacy of the world. So, look at the language, look at the words, look at the vision of Mr. Narendra Modi, how he actually thinks about this industry in India. So, that's what he's telling. He's naming India as the pharmacy of the world. So, let me give you my view on it. See what I see today. What I see today, how our this pharma industry is looking like, is what our IT industry was in 90s, late 90s, and early 2000s. That is the baby steps. There was a small industry in those times, which we saw in IT industry, but you see the consistent growth. So they have invested a lot in R&D. They invested. If you talk about R&D, IT industry, they invested a lot in human management, knowledge management, and they continued to increase their presence in the world. And the edge was knowledge, continued vision, continued investment on the probably your technology and the right kind of people. The same kind of baby steps we are seeing in pharma industry. See, I have chosen this talk, but if you go into deep and if you study hard, probably you will find number of stocks in pharma industry in India which have the potential to become multifold. So do not lose the chance to enter into pharma industry. Don't think it has been late. I was seeing one of the comments from one of our friends which he posted to me on Trent. That sir, this stock has already become multifold. Now what to do? That's fine. The stock which has become multi-front from here can also become multi-front from here also, because the addressable market is large and the company's business potential is very large. The same thing is happening with India pharma industry. The world addressable market is very huge, both in India and the world, and the people are looking, onto us for doing all those things. We are a great exporters of medicines. We all know what we did in the COVID, how exactly we all cater to the world markets, and how we fought with the foreign companies, how we compete with the foreign companies. That itself shows the strength and probably the power of our people, our leaders of the pharma industry. So, India's pharmaceutical industry has gained international recognition as the pharmacy of the world, particularly for its imperative role in supplying vaccines, essential medicines, and medical supplies during the COVID 19 pandemic and beyond. The sector has showcased its innovative capabilities and established itself as a crucial global pharmaceutical value chain member. The drug and pharmaceutical exports has increased from $15 billion to $27.85 billion. So in 10 years, we become more than double. India's drug and pharmaceutical exports increased from $15 billion to $27.85 billion, ranking third globally in drug and pharmaceutical production by volume. India exports approximately 200 countries and territories. Imagine, guys, the kind of reach our companies has now. Top five destinations for the exports are USA, Belgium, South Africa, UK, and Brazil. With a 10 to 12% growth rate, India's pharmaceutical sector is expected to reach $100 billion by 2025, fueled by its robust domestic manufacturing base. India's biotechnology boom, it has really been a boom only because you can see 13 times the industry has grown in biotechnology. In 2014, we were $10 billion. Today, we are $130 billion, guys. 13 times increase in 10 years. So India's biotechnology sector has increased 13-fold over the past decade. It is projected to reach $300 billion by 2030. $300 billion. That means another 2.5 times increase from this larger base as well. Growth in the Indian pharmaceutical industry is being driven by metropolitan cities, tier 1 cities, rural markets, each accounting for approximately 30% of the market share. Again, this industry has been given the advantage of the PLI scheme. So there has been a scheme outlay for 15,000 crores. The scheme aims to enhance India's manufacturing capabilities, diversity of product portfolios, and support domestic production. Additionally, the PLI scheme for bulk drugs and medical devices have achieved significant milestones in their first year of implementation. The government of India has implemented several initiatives to promote the pharmaceutical sector and boost investment. This PLI scheme of 15,000 crores will only give a lot of advantage and motivation for more and more people to produce and to increase more and more manufacturing facilities. The scheme provides incentives. It is divided into three categories. First category is biopharmaceuticals and patented drugs. Second category is active pharmaceutical ingredients and drug intermediates. Third category is various therapeutic drugs and in vitro diagnostic devices. So that's how the three categories are divided for the PLI outlay scheme. Again, the same thing. I'll not touch much upon this. We already discussed, but let me just pick up the growth, the incremental sales. So incentives are based on incremental sales with rates of 10% for FY 22-23, for 25-26 8%, for FY 26-27 and 6% for FY 27-28. So that's how the categories and percentage have been divided. Also, how you will get the PLI advantage. So Indian pharmaceutical industry has witnessed a robust growth. We have seen from $15 billion, it has gone to $13 billion. The country now ranks third worldwide by volume of production and 14th by value. Globally, it ranks fourth in terms of generic production, 17th in terms of export value of bulk, actives, and dosage forms. It has shown tremendous progress in terms of infrastructure development that we've seen. The industry now grows. The industry now produces The industry now produces bulk drugs belonging to all major therapeutic groups requiring complicated manufacturing technologies. In 2025, the projected revenue in the pharmaceutical market in India is expected to reach $14 billion. The largest market with pharmaceutical industry is oncology drug, which is projected to have a market volume of $2 billion. And looking ahead to 2029, the revenue is expected to exhibit an CAGR of around 5.28%. That's again a good feature for the pharmaceutical company. If we see the salient features, so again, this slide is giving a breakup in terms of revenue, drug wise, not important for us. I'll just skip it through, not take much time on this. So this is very important slide. So it is giving you how the worldwide pharmaceutical market has increased from 2001 to 2023. So if you see in 2001, the entire pharma market was only 390 billion US dollars. Today it is around 1600 billion dollars. This is around 2023, the figure we're talking about. So it has increased five times in last 20 years. The overall market itself is increasing. So that is why I say when your entire balloon is increasing and within that balloon the company is also increasing, that makes a perfect recipe for a stock price to go up. This is how the growth has been from 2018 to 2028 projected. This is in terms of daily usage. This is in billions. So we have grown from 2964 to, and it's projected to around go to 3778 billions DDD. In India, we'll see a CAGR of around 3.5%. So this is how the forecasted growth is, and we already seen how the pharma industry for the world is growing, and in terms of volume as well. If you see global spending also, this is excluding COVID-19 vaccines and therapeutics. So we have grown to 2238 billion US dollars from a mere 1 around $1,200 billion in 2018. So again, around double we have become in less than 5 to 6 years. So that's a been the kind of growth, the spending on this pharma sector, and it will continue to grow. The world is aging up. India will also age up at a particular point of time. We all have become health conscious. New and new diseases are coming into picture. The consciousness, the awareness to keep yourself healthy is also increasing. The life expectancy is increasing in the world and India. That will keep the growth of this pharma industry always intact. That's by spending by volume and by region. So, Eastern Europe, Latin America, Africa, Middle East, North America, and Western Europe. There we have seen the increase more in terms of this is the percentage spending growth. On the volume side, it has been slightly lower. But if you see India, that is a standout. It is growing in terms of volume growth also and in terms of revenue growth also. So India is actually on the pie chart the biggest market or the biggest growth driver, because it is growing not only in the volume segment, means the number of dosage people are consuming, and even the revenue part. So it is sometimes you can have a dosage which is higher in value, so that gives you more revenue. So India is in the pie chart on the extreme end, both in terms of revenue and in terms of dosage. China is high on dosage, low on revenue, and Japan, of course, it is slightly lower in terms of both revenue and dosage. So, what assessment of India pharmaceutical is? What is the strength of India pharma sector? It is strong export market. India exported drugs worth around $15 billion to around 200 countries. Large domestic pharma companies also they are continuously growing. That's again a competitive advantage. They are doing a lot of acquisitions. It's a very high cash driven market. It gives you a lot of hard cash. It is low debt. That is why you can acquire more. You can spend more on R&D. A competitive market with the emergence of number of second-tier Indian companies with new and innovative business models. Indian players have also developed expertise in significant biologics capabilities. Biological portfolios are still nascent stage in India, and they're continuously growing with more and more R&D facilities. We have low cost of production because we have cheap labor. Our cost of production is still lower. That again gives us a margin advantage. It gives a low entry barrier in terms of world markets. We have low R&D cost because our manpower is very cheap. Even the skilled manpower is cheap, and the biggest scientists are also cheap available here. That's why we are low on R&D cost. We have innovative scientific manpower, excellent and world-class national laboratories specializing in process development and development of cost-effective technologies, increasing balance of trade in pharma sector. That is very important. We are importing less, exporting more. An efficient and cost effective source of procuring generic drugs, especially the drug going off patent in the next few years. An excellent center for clinical trials in view of diversity in population. So, because we have diversity in population, age groups, different states, different climate conditions. So, a lot of clinical trials can happen in this country. That's why the R&Ds are happening much rapid pace in India. What is required to become global pharma powerhouse? So, what it requires it, and the term which has been coined by our Prime Minister is Viksit Bharat by 2047. It aims to solidify its position as a global leader in pharmaceutical sector in India by 2047, reaching a projected market share of 450 billion US dollars. Imagine the kind of growth we are looking at, and that will happen by strengthening the APIs and KSM's industry for self-reliance, India's leap into next-generation therapeutics, strengthening India's CRDMO market, which is contract research, development, and manufacturing organization, emerging horizons with the convergence of pharma, digital, and medcac, future of integrated and accessible healthcare in India. So more and more, and so we see a lot of if you see a lot of states now, and not even India, We are launching newer and newer insurance schemes. More and more people are taking the insurance policies into picture, which is giving them the best of the treatment. They're giving the best of the hospitalization things, best of the drugs, patented drugs, good quality drugs. And we, as soon as the culture of this integrated and accessible healthcare will increase, our domestic share will increase apart from the world share as well. Scaling of new era pharma innovation and global leadership, we require continuous innovation. This is one industry where you have to invest continuously in R&D to remain competitive and to produce new products to increase your market share. Now, what the advantage is for the pharma sector? Advantage India. So, cost efficiency. India has emerged as the medial tourism hub of the world, providing cost-effective treatments with the latest technology enabled by several path-breaking reforms and provisions. Access to affordable HIV treatment from India is one of the greatest success stories in medicine. India is one of the biggest suppliers of low-cost vaccines in the world. Because of low price and high quality, Indian medicines are preferred worldwide, thereby rightly making the country the pharmacy of the world. India has been traditionally quite strong in pharma sector with a low cost of manufacturing. This is around 35% lower cost than US and Europe. And the R&D cost is 87% times less in developed market than the developed market because of cheap labor and other incentives the government is giving. What is the economic drivers? The total market share is expected to reach around $40 billion in by 2047. That means you can invest now and reap the profits in the years to come. Indian pharmaceutical companies are projected to achieve a revenue growth of 9 to 10% in FY25. That's fine. India has the largest number of US FDA compliant pharmaceutical plants outside the US and over 2,000 WHO GMP approved facilities serving demand from 150 plus countries worldwide with 10,500 manufacturing facilities. Huge numbers. Policy support, we already discussed about the PLI schemes, and we continuously see more and more schemes given by or incentives given to pharma sector during various budgets and other formal proceedings. Increasing investment, we allowed 100% FDI automatic route for greenfield pharmaceuticals means when you are making a plant on the from a zero level, and around 74% when you're doing brownfield. Brownfield means you're increasing capacity or doing some changes in the existing plant. Cumulative FDI equity inflow in the drugs and pharmaceutical industry is about 22.5 billion US dollars. Indian pharma companies have a substantial share in the prescription market in US and EU. In the interim budget 2024-25, the government earmarked around 1,000 crores for the promotion of bulk drug parks for FY25, a significant increase from the previous year. So this has been the shape and outlook of Indian world markets, how the world market is looking like, how India market is looking like. We also saw the growth, the company's outlook. We saw how exactly it is diversified. What are the different products? What are the different products in the pipeline? So those all things have given the picture about the company, about the world, how the industry is looking like, and how it is increasing in India itself. And we've seen the cost advantages and other things why India will always remain fundamentally competitive than the other countries, and this market can only grow from here. And all the world is looking on to us. And as a rightly word coined by Mr. Prime Minister, that we are the pharmacy of the world. So now coming to the fundamental of the company. So it has a market cap of only 11,000 crore as of now. The P is also very exciting, around 33. The ROC has been excellent, around 27%. ROE has been around 16.5%. The book value is around 51. The EPS is around 7.66. The promoter holding is 44%. There is slight less than 50%, which generally I don't like, but I'll tell you in the forthcoming slides why I like this company even with 44% market share. We'll see in the forthcoming slides where we see the shareholding distribution of various promoters and other shareholder partners. The company is sitting on cash, 2,200 crores approximately. Price to book is slightly higher, 5. But anyways, with the kind of growth and with the kind of potential it has, it will attract this kind of high PE and price to book. Intrinsic value 180. It gives a dividend also, although very less dividend, 0.24% dividend yield, and it has a very small debt of 200 crores. Performance has been excellent. The company has already turned into a multi-bagger. A 25 rupees stock has become 250. It has slightly come down from around 350 levels to 250. So probably you can start entering into this market in this stock. It's trading at around 33 PE. If you get sometimes around 25 PE, that will be an ideal price, but you can start accumulating from this time onwards. And when you get cheaper prices, you can increase your quantity. So I really, I always advocate that you should build your position in almost 6 months to 1 year. You should never increase your positions at one go, because our stock market goes into cycles. So sometimes some industry will grow, sometimes some other industry will grow, and it gives you a chance. Every industry, every stock will give you a chance to enter into a good price, good entering price. So that's why I tell that try to enter at good price. So in terms of operating profit, so it has been continuously increasing. 60 crores, say it has gone to 136 crores, and the margins have been pretty healthy, around 21%. That's very exciting. And we have seen the EPS growth also continuously from 1.11. Now we are crossing around 2.13. Again, if you see from March 2013, the profit was around 69 crores. This is the operating profit, and it reached to 507 crores already. This is trailing 12-month basis. So we can see it's almost more than it's around 8 times already increase in profit in last 10 years or so. So that's again a fantastic thing, and that's how the EPS has also grown from 1.19 to 7.66. So again, very good fundamentals. Never occurred a loss. Very healthy margins. Continuously, they are increasing the margin, or at least they're keeping the margins very steadily, very healthy. And again, we saw that they're sitting high on cash reserve. They have very less debt. So all these markets fundamentals looks very fantastic. Already discussed reserves बहुत हैं इनके पास 2200 crores on by September 24. Rest are only numbers, not important. If you see CWIP, that is the cash flow in progress, capital workflow in progress, that is very less. So it requires very less capital, and the investments are also very less. So that's again a good advantage that you're sitting on cash, but investments are less, and your cash capital requirement is also less, which means it gives you more and more leverage. It gives you more and more opportunity to acquire a lot of companies worldwide, to gain your market share, to gain marketing facilities and etc. All those things. Shareholding important. Therefore, that's what I was telling you on the previous slide. So all the promoter has 44%, but look why it is 44. Because 22% is being owned by FIIs. And that is why I always say that these people know, they do very extensive research. So if they are holding in a company 22%, imagine a company has 11,000 crores of market cap, and if they are owning around 22%, which is approximately one fifth, or let's say around one fourth, which means around 2,000 crores or 3,000 crores worth of shares FIs are holding. DIs also have 4% and rest with the public. So that's why even with low promoter, because the shareholders, the next bigger shareholders are FIs, it gives me a lot of comfort and lot of relief that it is on the right hand, because these people, when they take bigger stake in the company, you take it from me, they always do a lot of research. And when they go and touch many parameters, when they all able to tick the boxes, then only they go for such kind of bulk purchase in the company. Financial trends have been fantastic for the company. If you see the operating revenue, it has been growing at a CAGR of around 14%. So from FY 17, 767 crores have now become 2200 crores. EBITDA and EBITDA margin has been steadily increasing. So in every graph, no, you'll see this upward blip. This is those COVID years. So you can just ignore those 2 years, because that time was extreme advantage time for these pharma companies. So even the margins, EBITDA margin has been increasing from 5.8% to 21%. That's why we were discussing that the margins are even huge. And now they are touching, if you see, they're touching the COVID levels. The margins are touching even COVID levels, because the advantage is so high. You are into a very small niche segment, and your OTC segment is very strong, which is cash driven, and your multiple R&D facilities are giving you those kind of very unique products. So that's why you'll always try to gain more and more margins. Their CAGR in terms of OTC revenue is also increasing, that we already seen in the previous slides, and that's why the net worth is increasing. The total assets are also increasing. It has reached around 2681 crores in total assets now in last 8 years. The net debt to EBITDA is always decreasing. देखिए, it was around 1.6 times your EBITDA in FY17. Now it is minus, which means it has no debt virtually. It has more reserves and less debt. That's why the figure is coming negative. The return on capital employed (ROC) is around 21.5%. I'm ignoring that COVID year of 35.8, but still very healthy, and it has been steadily increasing. That's again very fantastic, and now it is inching closer towards those COVID times. Return on equity has been again excellent. It has reached around 17%. Again, trying to achieve the COVID levels, which is around 30%. We already discussed the ratios. We will not dwell much time. There's nothing new in this, so I'll just skip this slide. We've already seen this data. This is again very important and very important, very distinguished chart. If you see how Marksans stock has performed vis-a-vis Nifty Pharma index. So index को अगर हम 100 रखें, it has gone to 179. But the stock को अगर we take the 100 as a base level, it has gone to 639. So it has outperformed the index by around 3 times. So it has 5%. It has increased by 5.40% in last 2 years. May 2023 it has given a dividend of 0.5 per equity share, and May 24 it has given a dividend of zero point 0.6. Not much, but that's fine. It is investing a lot of money in acquisition, so that's fine. Even if they're not giving us dividend, they're investing. If you're getting such a fantastic return out of the money, which they're not giving dividend, but they're investing in new and new facilities and plants, that's more investor wants. So again, very 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 fantastic. Strong balance sheet to drive inorganic growth. Yes, we've already seen that they have cash balance of 657 crores. Consistent annual cash generation. Every time they're generating cash. That's really fantastic. Disciplined capital allocation. ऐसा नहीं है कि if they are sitting on cash, they are wasting the money. Strong credit rating. Fund based rating is around A plus positive, and non-fund based rating is around A1 plus. There are no financial risk. Driving inorganic growth. Evaluating acquisitions in Europe region for front end presence. How it is looking now for FY25 and beyond is looking very, very fantastic and very encouraging. Doubling low cost manufacturing capacity in India from 8 billion units to 16 billion units. Total manufacturing capacity of Marksans is around 26 billion units per annum. Strengthening business with existing customers leading to an increase in SKUs and strong order book. Continuously building a healthy product pipeline, including complete product offerings in key therapeutic segments. Started backward integration to expand their margins. Maintained cash positive balance sheet for more than 5 years with disciplined capital allocation approach and a successful track record for acquisitions. Growth for FY25 and beyond. High growth in revenues and margin. Aim to reach revenue of 3,000 crores in next 2 years. So that's again an increase of 50%. Presently they are around 2,100 crores or something. So if they reach 3,000 crores, that means there will be around 45% increase. Doubling revenue in North America, US and North America, and becoming one of the top 5 private label OTC companies in the region. Again, a fantastic aim. To be in the top 3 from the current top 5 Indian pharmaceutical firms in the UK in the terms of revenue. So we saw on the previous slide that they are at currently at 5th position in UK in terms of revenue. They want to come to 3rd position. And merger and acquisition to support growth in Europe region, consistently enhancing shareholder value. That's how they look forward for FY25 and beyond. So this was the presentation on this talk of Marksans Pharma. I think friends you would have liked it. I have tried to cover why this stock is good, why the market is good, why India market is looking good, why world market is looking good in terms of pharma industry, why the fundamentals are good, the great leaders, they're spending on R&D, the stock performance has been very good, they're sitting on cash, no debt, the ROE, RSE, all fundamentals have been good, their products are continuously increasing, there are more products which are under approval, there are more products which are under the pipeline. So all these things put together is giving a very good recipe of becoming a multi-bagger stock from here. So this was the stock for today. Thank you for listening to me. It has been slightly longer video, but I tried to do it as fast as possible. Still could not reduce any time from here. So thanks for listening. Thank you guys. Thank you.